Welcome, traders. Adam Harris, chief market analyst here. So basically what I'm going to do here, this is for my regular paying followers on Substack, and really going to do a trade idea. So looking through the market, seeing where the potential trading opportunities are. For now, I'm going to do them on the higher time frame. I'll be looking at the daily as opposed to day trading. And so let's just go and have a look and see what's going on. So first of all, we've got euro dollar here starting to slow down. We could see a bit of bullish divergence here. Now, that doesn't mean a change of trend is guaranteed. At the very least, what I would expect it to do is to potentially do a correction to the upside here. So you can see a bit of a bullish monthly candle forming here at the moment. Now, we've got 8 days until the end of the month, and this could very well change. We could find that it actually ends up closing lower, and so this doesn't mean anything. But if it does close as a strong bullish candle, and we break the high of that in the coming month, we could very well see a return to this range for the US dollar. We're not there yet. So what I would like to see is to see a break, a move up to 1.06. I'd like to see price come down on the other side of the 50-period moving average, find support, and of course come back up and break that high. So all of that has to happen over the coming weeks. It's a bit of a slow mover, but what it would mean is that there could potentially then be a brand new uptrend to the upside, with end-of-day opportunities against the US dollar. Now, the dollar itself has been trending incredibly well. Excuse me here. So some of the best trend trading opportunities have actually just been against the US dollar, which is not always the case. Let's have a look at sterling. Sterling is a lot weaker. So sterling, the trend here is a lot stronger. Prices pull back into the moving averages here. I think we could potentially see another move down and possibly then a bounce back up. So I'm looking for what would essentially be a double bottom type of behavior here. We are definitely starting to bottom out here in terms of momentum. And we have got a level of support here, so we'll have to see if that ultimately does play out. But this trend currently is actually looking relatively healthy for this, but it looks as though possibly this is starting to bottom out, which it shouldn't. And we'll see. So we might get a bit of a reversal there. Then we look at Aussie dollar, US dollar. We're definitely getting bullish divergence here. So this is now a weekly retracement. The question is it coming back up to, I think it's got a fair chance to come back up towards 0.6350 or 0.64. And then I'll have to see if it wants to come back in the range or if it wants to continue down. So really the question now is, are we seeing a bit of a breather before the dollar continues to strengthen throughout 2025? Or are we actually seeing a bit of a reversion and we're going to see it come back within the range? So if we have a quick look at that dollar index, we can see it broke out of the range, certainly here on a monthly time frame. That appears to be the case. So the question really is, have we broken out? Are we going to retest this and continue up to these previous highs, which is going back to 2022, or are we going to see it return back into the range? And we can't tell that yet. We have to see how that plays out. And as I said, one way for that to happen is to come below that 50-period moving average, back down towards these lows, possibly break them, then struggle to come back up above the 50 and then continue down. All of which is going to take several weeks to play out. Let's have a look at Kiwi dollar, US dollar. So Kiwi dollar, US dollar is actually almost very similar. It's got clear bullish divergence. We're coming up to test these highs over here. I need to see a break of that, but certainly there's no reason why I couldn't see us having a retracement back up to 0.58 or a little bit further up towards possibly, and this is in the near term, 0.5875, let's call it. So looking at that. Here's where it gets interesting. We've got dollar Swissy. Dollar Swissy itself has actually been trending really nicely and looking very good. However, you can also see the potential for a range here. So is it possible that we could see it coming back down here towards the midpoint of the range? Absolutely, 0.8822. That's feasible. It's possible certainly because it's a Swissy. What is interesting, we've certainly got bullish momentum here. So I was expecting Swiss franc to find some support here and then take another run if it's going to break out to the upside. So the Swiss dollar Swissy chart is going to be one to watch because it will give us one of the strongest clues as to what's going to happen. Dollar Swissy, dollar yen, believe it or not, against the euro, aside from euro dollar, will give us the biggest clues. So if dollar Swissy comes back into the moving averages here, starts to form a bullish candle, starts to take another run at that level, then the likelihood of it breaking out to the upside and therefore a stronger dollar starts to get added into the mix. Dollar yen as well, same thing here. Dollar yen wants to keep going up. It just really doesn't want to quit. We know that the Bank of Japan really wants it to come back down below that 150 and lower. And so they're going to start putting pressure on it. Now, I mention all this because there's a lot of different things at play here. If the Bank of Japan does indeed succeed in getting dollar yen back down here, that will potentially weaken the dollar. So that's why I say that, because there are a couple of things here which could change the trajectory and we could see that dollar weaken as opposed to strengthen. But currently it's strong, and the real question is are we seeing that die, or are we seeing it just take a breather? All right, so let's have a quick look at dollar CAD as well. So dollar CAD has just had an incredibly strong run, and it just refuses to kind of take a bit of a breather. So this is another one that broke out of a range that could benefit from a pullback to the outside of the range to